So if you were keeping an eye on the crypto markets this past weekend, you definitely saw Bitcoin take a pretty sharp dive. It happened fast, right? And it left a lot of us wondering, okay, what just happened? So in this explainer, we're going to dig in and break it all down. What caused it, who's behind it, and maybe most importantly, what it tells us about the health of the market right now. And boom, there's the number. A sudden 3.3% drop right after the weekly open. We're talking a tumble from over $69,000 all the way down to around $66,800. Now look, in a market this massive, a drop of several $1,000s in just a few hours, that's a big deal. It definitely makes you sit up and pay attention. So that's the big question, right? Was this just the market being the market? Some random noise? Or was there something specific, something real, pushing that price down? That's what we're going to find out. Let's follow the breadcrumbs. All right, so our first clue, it leads us straight to a major US-based exchange, Coinbase. The data is pretty clear that a whole lot of activity there was the trigger for this whole thing. Let's look at the evidence. Okay, to really get what's happening, you need to understand this thing called the Coinbase Premium Gap. It sounds complicated, but it's not, I promise. Think of it as a kind of barometer for what US traders are doing. It just measures the price difference between Coinbase and another huge exchange, Binance. So if the price on Coinbase is lower than on Binance, that gap goes negative. And that's our signal. It tells us that sellers on Coinbase are getting really aggressive. And here it is, the smoking gun, if you will. That gap hit negative $80. All weekend, this premium gap was negative. That means Coinbase was trading at a discount. At one point on Friday, it dropped all the way to minus $80. This is a huge signal. It tells us that even before that big price dump we all saw, there was this consistent heavy selling pressure coming straight from US traders on Coinbase. So there you have it. We've basically identified our initial culprit. The evidence is really pointing in one direction here. This wasn't some kind of market-wide panic. Not at first. It was a concentrated wave of selling coming from a very specific place, US-based traders on Coinbase. Okay, so we know where the selling kicked off, but that's only part of the story, right? The next huge question is, did that set off a chain reaction? Did that initial drop spook everyone else? Did the newer investors, the so-called weak hands, start panic selling too? And we're going to zero in on one group in particular, short-term holders. Now, these are the folks who've bought in more recently, so they tend to be a bit more jumpy when the price drops. If they start selling off in huge numbers, that can signal a real full-blown market meltdown. So, what did they do? And wow, this chart tells you everything you need to know. Just look at the difference here. During this most recent drop, only about 9,000 Bitcoin were moved to exchanges at a loss by these short-term holders. Now compare that to what we saw back in September and October. We're talking 56,000, 55,000 Bitcoin being sold off. I mean, the difference is just staggering. So the big takeaway is pretty clear. Even with all that pressure coming from Coinbase, the rest of the market, these short-term holders, they didn't fold. They're holding strong. And that tells us that widespread panic hasn't really set in. At least, not yet. But hold on, the story isn't over. Because what this initial price dump did do was expose a much bigger and honestly more worrying problem that's been hiding just under the surface. There's a hidden weakness in the market's foundation, and we need to talk about it. So here's a way to think about it. Imagine a key price support level is like a sheet of ice on a frozen lake. The first time you step on it, it feels rock solid, right? But what happens if you keep jumping on that exact same spot over and over and over again? Well, the ice starts to get hairline fractures. It gets weaker with every single impact. And that's exactly what's been happening to Bitcoin. The price has now come crashing down to test this critical support floor. This floor around $66,000 4 times. 4 separate times recently, sellers have pushed the price right down to that level. Each one of those is another jump on that same spot on the ice. And hey, this isn't just a Bitcoin story. If you look over at Ethereum, the second biggest crypto, the situation looks even more precarious. Its key support level, around $3,400, has now been tested 5 separate times. That ice is looking even thinner. Right, so here's why this is so important. It's not just that the support level is being tested, it's about what happens after the test. And what we're seeing are really weak bounces. The buyers are stepping in, sure, but they're doing it with less and less power, less conviction each time. This pattern, these multiple tests with weaker and weaker bounces, that's a classic textbook sign of market fragility. So let's put it all together. What have we got? We've got heavy selling pressure coming from one specific place. We have a wider market that's holding on, but, and this is a big but, we have a critical market floor that's getting weaker and weaker every time it's tested. So what's the final verdict here? Well, the analysis from our source material puts it pretty bluntly. These levels won't hold forever. It's just not sustainable. That metaphorical ice, it can't take an infinite number of hits before it finally gives way. So here's what this all means for you. Why does this matter? First, even though that support level is holding for now, the defense is getting tired. The bounces are weaker. Second, this means the risk of a much sharper, more painful breakdown gets higher with every single one of these tests. And finally, it's a huge warning sign. It's telling us that right now is a time for caution because the very foundation of the market is showing some serious crap. And that leaves us with the big hanging question, doesn't it? We've seen 4 tests for Bitcoin, 5 for Ethereum. We know the buyers are getting exhausted, and we know that floor is getting weaker. So you have to wonder, how many more jumps can that ice really take before it shatters?